whatever turns you on. It may turn out that it'll be more profitable than you can think, but almost everybody here will make enough money, unless they get some terrible habits along the way, to do reasonably well. And doing reasonably well in this country really is pretty darn good. I mean, it's not necessary to have huge amounts of money in order to enjoy yourself. I enjoyed myself when I had my $10,000, and I live in the same house that I lived in when I was making it, when I had about that. I bought it 41 years ago. I liked the house then. I like the house now. I mean, if you think about it, if you have a reasonable job, you'll be eating at McDonald's and I'll be eating at McDonald's. So we're to push on food. I mean, you know, in fact, I hope it's Dairy Queen, actually. And and if you come to Dairy Queen, you'll see me. And you can order anything on the menu I can order, and we both can afford it. You know, you'll wear the same clothes I wear. I'll pay more for my suits, but as soon as I put them on, they look cheap on me. So we'll look about the same. And we'll both live in the same kind of houses. I live in that house from 41 years ago, and it's warm in winter, and it's cool in summer, and it's comfortable. And you'll live in a house that's similar. And what difference does it make if you have 50 more rooms or, you know, guest houses or all that? You know, it'll probably just bring you problems. I mean, you have to worry about the greenskeeper or something when you get through. So I have been in the houses of people where the houses are worth probably 200 times what my house is worth, and I would not be any happier in those houses at all. In fact, I'd be less happy. I just have one more thing to worry about, and you know, dozens of people around the place, and people quitting, and people stealing from you, and all kinds of things. To hell with it. Yeah. We'll drive the same kind of car. In fact, you'll probably drive a better car. I drive a car that's about 8 years old. I don't know what it's worth now, but it gets me around fine. I mean, I'm perfectly happy with it. We'll watch the same television, you know. We'll work on the same computer pretty much. The only difference will be how we travel long distances. You know, I will fly in a plane that's more comfortable than flying Southwest Airlines or something, which I've got nothing against. But that's the one real big difference. And other than that, I do what I like every day. I hope you'll do what you like every day to do. And I work with nice people. I hope you work with nice people. And there's 24 hours in the day, and those are where the hours go. So great wealth is the tiniest bit different in a real sense than having just a decent income. And to trade a decent income and something you love doing and something where you feel worthwhile doing it for huge wealth where you trade off a lot of your principles would be a terrible mistake.
Well, they try to, they just don't realize that all you have to do is just buy a cross-section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow, and you know the cost of moving around. Now you get something handed to you, liquidity, you know, which is instant. You can sell, and the cost of doing it are pennies, you know, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing.
Cash is always a bad investment. I mean, when people said cash is king a year ago, I mean, that's crazy. I mean, cash wasn't producing anything, and it was sure to go down in value over time. On the other hand, you always want to be sure you have enough. I mean, it's like oxygen. You want to be sure it's around, you know, but you don't need to have excessive amounts of it around. And cash, we will always have enough cash around. But anytime we have surplus cash around, I'm unhappy. I mean, I would much rather have good businesses than cash. And we found a chance in the last year or thereabouts to deploy. We came in with something over $40 billion in cash, and we've got about $20 billion now, and we've had some earnings. So we put a lot of cash to work, and I like that. No, I'd much rather own a good business than have cash. Well, you can say all assets are a hedge against the dollar. I mean, all you know is that the dollar is going to be worth less 10, 20, 30 years from now. I say worth less, not worthless.
Right.
You want to watch that. But it will be, you know, and that's true of almost every currency that I can think of. The question is how much it depreciates in value. But
investing is not that is really not complicated. I mean, the basic framework for it is simple. Now, then you have to work at it some to find the best pockets of undervaluation, maybe, or something. But you didn't have to have a high IQ. You didn't have to have lots of investment smarts to buy junk bonds in 2002, or even to do some of the stuff that was available when LTCM got in trouble. You really just had to have sort of the courage of your convictions. You had to have the willingness to do something when everybody else was petrified. But that was true in 1974 when we were buying stocks at very, very, very low multiples of earnings. It wasn't that anybody didn't know that they were cheap. They were just paralyzed for one reason or another. And that the lesson of following logic rather than emotion, is something that's obvious, and some people have great trouble with it and others have less trouble.
I was very lucky, and I've really been that way all my life. And what I do is important as what a good teacher does or a good nurse does or something of the sort. I think that's quite questionable. It pays off enormously well in a market economy like the United States, but that's an accident. It didn't have anything to do with any innate ability of mine.
What are, say, 3 pieces of advice you would give to people who are looking to succeed in business?
Well, by far the best investment you can make is in yourself. I mean, for example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. And, I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas. And that's relatively easy. I did it myself with the Dale Carnegie course. Some people wish I'd taken a shorter course now in terms of my talking later on. But it's just hugely important. And if you invest in yourself, nobody can take it away from you. I mean, the second thing, which I'll get a certain criticism for not living it, but I do tell those students, that if I gave you a car and it'd be the only car you get in the rest of your life, you take care of it like you can't believe. Any scratch, you'd fix that moment. You read the owner's manual, you keep a garage and do all these things, and you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you should really make sure that you just remember that you just got one mind and body to get through life with and to do the most with it.
But we don't pay any attention to what people say about Coca-Cola stock or Gillette stock or any of those things. I mean, on any given day, 2 million shares of Coca-Cola may trade. That's a lot of people selling, a lot of people buying it. If you talk to one person, you'd hear one thing, and talk to another. You really should not make decisions in securities based on what other people think. If you're doing that, you should think about doing something else, because a public opinion poll will not get you rich in Wall Street. So you really want to stick with businesses that you feel you can somehow evaluate yourself. And Charlie and I, we don't read anything about what the economy is going to do, or the market's going to do, or what anytime I see some article that says, these analysts say this or that about some business, it doesn't mean anything to us. You cannot get rich with a weapon.
Their financial future.
For what to secure their financial future?
For youth.
Youth? Oh, well, it's not very complicated. It goes back to getting full use out of your own talents first. Earning X or 2X or 3X a year 20 years from now is going to be a function of how well, not how much talent you have, but how well you use the talents you already have. And so that is your best financial future is your own ability and your a capacity to use those abilities to their potential. And that can't be taken away from you. They can't even tax it. I mean, most things, if you own a piece of real estate, if they double the taxes, they double the taxes, and that changes your ownership in the property, because now, in effect, the taxing authorities own more of it because they've got a greater command on the revenue stream. The same thing about almost any asset you have, but they don't tax what's in your head, and they don't tax your ability to start performing when you get to work in the morning and finish in the evening to your potential. One of the things that amazes me is how people who really do perform well just sort of jump out at you once you're running a business. When I got out of school, I thought, everybody would behave that way, but they don't. Most people sort of go through life in a sleepwalk, and if you don't, you will stand out. So the biggest thing for your financial future is yourself. Now, beyond that, it is always being ahead of the game rather than getting behind the game. It's saving a little, no matter how you do it. I mean, I delivered papers, I worked at Penny's, I sold golf balls, I had a pinball machine around. I did a lot of things that enabled me to accumulate about $10,000 by the time I got out of school. 10,000 doesn't go as far now as it did then, but having anything so that you're ahead of the game and not getting behind the game is enormously important. I mean, just, if you're going to run a 100-yard dash against a bunch of people in life, if you can figure it out so that when the gun goes off, you're 10 or 15 yards ahead instead of 10 or 15 yards behind, it's going to make an enormous difference in how that race comes out. So having some net resources doesn't make much difference whether they're in stocks or bonds, in my view, but and not having debt when that gun goes off when you get out of school is a huge plus over being behind the game. And it may come from delivering a paper out in the morning. It may come from part-time work someplace, but put aside a few dollars for yourself, so that when the time comes and you enter the workforce, you're ahead of the game and not behind. And then once you get there, don't get behind by buying a whole lot of things that you figure you're going to pay for someday while you're paying 20% interest in between. Yeah, well, there's no question it's turning the world upside down. It's done it somewhat already, but it will, it's just beginning, but it's moving very fast.
Actually, I picked out the car I have based on the fact that it had airbags on both sides. So that was a factor. It may have been the first car of its type ever made with airbags, but I think my car actually, it's both heavy and has airbags, and those are two primary factors in safety. I don't think I don't think a safer car is necessarily being made. It might be safer to drive around in a big heavy-duty truck or something, but I'm not ready for that. Incidentally, on a car, I look at that like anything else. It would take me probably a half a day to go through the exercise of buying a car and reading the owner's manual and all of that, and that's just a half a day I don't want to give up in my life for no benefit. If I could write a check in 30 seconds and be in the same position I'm in now with a newer car, I'd be glad to do it this afternoon. But I don't like to trade away when there's really no benefit to me at all. I'm totally happy with the car. I just don't want to trade away the amount of time I'd have to spend fooling around to get familiar with and get title to and do all the rest of the things, pick one out, so a new car. But if there's a safer car made, I'll be driving in it. The aggregates business, concrete, all of that, those are businesses, Charlie probably knows more about them than I do. We've looked at businesses like that. In fact, we've even owned a few shares at one time or another because it's an understandable business, and it's a business that, well, particularly if you get into concrete, cement, I mean, there have been periods of substantial overcapacity, particularly on a regional basis, but those are fundamental businesses, and at a price, for low-cost capacity and advantageously located raw materials and so on, we would do it. In fact, Charlie and I talked about one probably 10 or 15 years ago, quite a bit, and he's had a fair amount of familiarity with it. And what was the other one? I jotted it down here. Let's see.
He wanted to know what business school.
Business schools. Yeah. Well, I would say this, that I think Bruce Greenwald's class at Columbia
is very good. He gets in a lot of people that are practitioners, so there's a lot of practicality to the course, and I think Bruce is good. He's got a new book coming out that probably within the next 6 months or so that will deal with that. And then there also has been endowed at the University of Florida certain courses relating to value investing, and I think there's been one at the University of Missouri. So I would suggest you at least check out the curriculum at the University of Missouri and Columbia and Florida, and do a little comparison, and maybe check with a few graduates, recent graduates, as to what kind of experience they had. I think if you can find them, I think that's the best system for evaluating a place. But those three at least have courses that based on the catalog sound like they might be of interest to you.
And I know the spirit in which you asked the question, but there's a market out there all the time, and people love to hear predictions. I mean, if I said I was going to offer a bunch of predictions today, I mean, we would have 1 million people here. I mean, they're dying to have predictions, and speeches at Rotary clubs or trade associations or whatever. They just plain love it, and that's what a whole industry is built upon. You know, the people coming out of Washington that talk about political predictions, and I don't read those in the paper at all, because it's space fillers basically. And you mentioned Edgar Casey. Ben Graham knew Edgar Casey pretty well, but I just have never seen any utility to any of that at all. There will be some huge surprises in the world. There's no question about that. But I don't think that betting on any specific one is a very smart policy. In fact, we usually bet against them in terms of super catastrophes. We know there will be a 7.0 or greater quake in California in the next 50 years. We don't know where it'll be or when it'll be or anything like that. We're willing to pay out a lot of money if it happens tomorrow. And because people do worry about catastrophes, and in this case it's perfectly proper with insured values, but it just isn't any way, in our view, to get through economic life. Charlie?
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums, and there's more chance that something is overlooked in that arena. And as Charlie has said earlier, it won't be like doing that in 1951 when you could leaf through and find all kinds of things that just leapt off the page at you. But that's the only way to do it. I mean, you have to buy businesses, or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy them, and you have to buy into good businesses. And that advice will be the same 100 years from now in terms of investing. That's what it's all about.
Ron?
Yeah, well, Ben Graham said long ago that you're neither right nor wrong because people agree with you or disagree with you. In other words, being contrarian has no special virtue over being a trend follower. You're right because your facts and reasoning are right. So all you do is you try to make sure that the facts you have are correct, and that's usually pretty easy to do in this country. I mean, the information is available on all kinds of things. Internet makes it even easier. And then once you have the facts, you got to think through what they mean. And you don't take a public opinion survey. You don't pay attention to things that are unimportant. I mean, what you're looking for is things that are important and knowable. If something's important but unknowable, forget it. I mean, it may be important, to know whether somebody's going to drop a nuclear weapon tomorrow, but it's unknowable. It may be all kinds of things. But so and there are all kinds of things that are knowable but are unimportant. In focusing on business and investment decisions, You try to think, you narrow it down to the things that are knowable and important, and then you decide whether you have information of sufficient value that, compared to price and all that will cause you to act.
To be able to take care of those people, and we should take care of them, and how we do it so that they feel most useful in life, and how we do it so that we continue to encourage people to be more productive themselves and all that. I mean, those are not easy questions, but that shouldn't take our eye off the ball of feeling we should do something about it. I pose this problem sometimes to people. I say, let's assume that it's 24 hours before you're born. And all of you can take this test, 24 hours before you're born. And a genie comes to you. And the genie says, what was your name again out there? Whatever, we'll call you Joe. And the genie says, Joe, says, you look pretty promising to me. I think you've got kind of a sense of fair play and a good mind. And so I'm going to let you have an extraordinary opportunity. I'm going to let you design the world into which you're going to be born in 24 hours. It's yours. You pick out the political rules, you pick out the economic rules, you pick out the social rules, you design the world. And when you're born in 24 hours, you're going to be born into that world. And that's the world that's going to exist for your lifetime, for your children's lifetime, for your grandchildren's lifetime. And you, having heard of some of these genie jokes in the past, would say, what's the catch? The genie says, well, it's a very slight catch. I said, when you're born in 24 hours, you're going to emerge in this world you designed. But what you don't know is whether you're going to be born black or white, male or female, rich or poor, bright or retarded, able-bodied or infirm, in the United States or Afghanistan. All you know is that you're going to reach into this barrel, which now has 6 billion balls, as we know, representing one person, every person in the world, and you're going to participate in what I call the ovarian lottery. You're going to take one ball out of that barrel, and you're never going to get another ball. That's you. You're going to get one ball, and now you're going to emerge. Now, what kind of rules do you want to have for that society, not knowing which ball you're going to get? Now, that I put to you is the way I think people should think about social policy. And if you're lucky enough to be born in this country, you've won the lottery already. But we should have a system, in my view, that encourages the Jack Welches and the Bill Gateses and all of that to work far beyond the time when it has any economic significance to them. We want people commanding those resources who are extremely able at commanding them. That's how the standard of living moves forward. So we should want Tom Osborne coaching in Nebraska. We should want Bill Gates designing software, and we don't want to mix up those two. We don't want to get Bill coaching in Nebraska. So you want a system that gets people to their potential and puts them in the position where they can do the most good for society. But you also want a system for the people who get the wrong ball. I mean, somebody's going to get the ball, that says 80 IQ. Somebody's going to get the ball that says this disease or that disease early in life that cripples them. And we've got a rich enough society that we can take care of those people. And I think that, to get back to your question, I think that this society will move more and more in that direction. It has the capability of moving more and more in that direction.
What others are doing means nothing. It's what Graham writes in Chapter 8 of The Intelligent Investor, that the market is there to serve you and not to instruct you. That's of enormous importance. When people talk about momentum in stocks or charting or any kind of things like that, they're saying that the market is instructing you. The market doesn't instruct us. The market is there to serve us. If it does something silly, we get a chance to do something because it's doing something silly, we do it. But it doesn't tell us anything. It just tells us prices. And if the price is out of line with where the facts and reasoning lead you, then action is called for. And if it doesn't, you forget it and, go play bridge that day and the next day see whether there's something new. And the nice thing about it is there always is something new.
Stock goes down. The question is, I have is the long-term valuation changed? And there was certainly bad news at Geico when we bought it, for example, but there was bad news in American Express when I originally bought it back in the 60s. It was the best investment the partnership ever made. And so what you like is bad news about a fundamentally good business. And then you got to make sure that it's still a fundamentally good business. But no, bad news on a good business. We're better off because Apple stock is down significantly from where it was 4 or 5 months ago than if it stayed there. Apple will probably, they may not, but they have said they're going to go down to cash neutral. They could do it either by acquisitions or dividends or repurchases, and my guess is it'll be mostly repurchases. They're about $130 billion away from cash neutral now. If the stock were at 200, it would buy 650 million shares. If it's at 150, you buy close to 900 million shares. We're way better off, if it's at a lower price when they're repurchasing shares. Our partners are selling out to us, and they're selling out cheaper than otherwise. The worst thing that can happen from our standpoint with Apple is it sells at 230 or something like that, because we don't like buying it as well at that sort of price. The Camel, well, I was back at Geico 10 days ago, and the Camel was running well ahead. He's admired Jeff. I mean, I met him 20 years ago or so, and I thought he was something special, but I didn't realize you could go from books to what's happened there. No, I mean, he had a vision and executed in an incredible way, something that it would not have, but there's a lot of games I miss. I would have missed, I would have missed Microsoft even if I gotten to know Bill earlier or something. Those just aren't my games. I don't worry about the things that I miss that are outside my circle of competence of evaluating. I have missed things that were within my circle, and that's a terrible mistake. Those are my biggest mistakes. You haven't seen them. But I don't, it's not a mistake because I miss Netscape or something like that at all. I would say that maybe 5% of the companies or 10% of the companies at most are within an area of my circle of competence. There's something I should be able to understand.
I think it would be very foolish of you, any of you, if you asked for less than, say, $50,000. Now, it's going to be a few years before you're out earning money, and so I've got a few years of dead money there. But then I would start getting this royalty on you as you went along. So I really think that if you thought about it, most of you would want a fair amount more than that. I think you'd be right. Fortunately, I didn't make this deal with anybody when I started out, so nobody's got a 10% royalty on me. But I think that 50,000 would sort of be the absolute minimum. And if you think about that, that means that right today, you are worth 500,000 because if 10% of you is worth 50,000 in cash today, your potential is worth a minimum on a 100% basis of $500,000. That is the big financial asset you've got. It's way more important what you do with that $500,000 asset that you own today than whether you decide to buy stocks or bonds, or whether you put your money in a mutual fund or pick your own stocks or anything of that sort. The biggest financial asset that you have going for you by miles is the value of your own earning power over the years. So that's really what you should focus on. If you're focusing on your financial future, that means you should focus on you. Because whether your 10% is worth 50,000 or 100,000 or 300,000, which would be 500,000 or a million or 3 million for all of you, whether it turns out to be one or the other is really dependent in a very large part on what you do in the next few years. All of you in this room have the brains to do extremely well in life. You've all got the energy to do extremely well in life, and then the question is, how do you apply it? If you've got a 200 horsepower motor, do you get 200 horsepower out of it? Do you get your full potential, or do you get 100 horsepower or 50 horsepower? Now, there's two things that can hold you back in getting the full horsepower out of your engine, whatever it may be. All of you have big enough engines. And one of those is a lack of education, but that probably isn't going to happen to very many people in this room. If you did have a lack of education, if you didn't have a chance to get a decent education in life, it wouldn't make any difference what that potential was because you'd never unlock it. But the second most important thing, and equally as important, is in terms of the habits that you develop, in terms of what you do with yourself. When we hire people, we look for three qualities. We look for integrity,
we look for intelligence, and we look for energy. But if they don't have the first one, integrity, the other two will kill you. Because if you're hiring somebody without integrity, you really want them to be dumb and lazy, don't you? I mean, the last thing in the world you want for them is to be smart and energetic. So smart and energetic only goes with integrity.
There's two kinds of items that people buy and think they're investing. One really is investing and the other isn't. If you buy something, a farm, an apartment house, or an interest in a business, and look to the asset itself to determine whether you've done something, what the farm produces, what the business earns, and so on, you don't really care whether the stock market's open. You can do that on a private basis. In fact, you do it on a private basis if you buy a farm or apartment house generally. And it's a perfectly satisfactory investment. You look at the investment itself to deliver the return to you. Now, if you buy something like Bitcoin or some cryptocurrency, you don't have anything that's producing anything. You're just hoping the next guy pays more. And you only feel you'll find the next guy to pay more if he thinks he's going to find somebody that's going to pay more. Now, if you ban trading in farms, you could still buy farms and have a perfectly decent investment. If you ban trading in apartment houses or even in equities, if you ban trading in Berkshire Hathaway for the next 5 years, our investors would do fine, over time. But if you ban trading in tulip bulbs, or if you ban trading in some Bitcoin, which nobody knows exactly what it is, people would say, well, why in the world would I buy it? And you aren't investing when you do that. You're speculating. There's nothing wrong with it. If you want to gamble, somebody else will come along and pay you more money tomorrow. That's one kind of game. That is not investing. Life advice is, the most important thing, aside from the things I've talked about already, is really who you associate with. You want to associate with people that are better than you are. I mean, basically, you'll go in the direction of the people that you associate with, and you want to have the right heroes. You want people. If you want to emulate somebody, you better pick very carefully who you want to emulate. And when obviously you can't pick your parents, they're going to have an enormous influence on you, but you don't get a choice on that. But you get choices as you go down the line, and who you admire, who you want to copy, and the most important for most people in terms of that decision is their spouse. It's also important in terms of a partner in business, but the partner in life is the most important one. You want to pick a spouse that's better than you are, and then he or she, and you hope they don't figure it out too fast.
Great. Biggest mistakes people.
And you put $1 million into the S&P 500 at that time and reinvested it. During my investing lifetime, that million would have turned into $5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. And you didn't have to pick the right stock. You just picked America. I go back and I point out that there were two 77-year periods before that, and that takes us back to George Washington getting inaugurated. And there wasn't anything here then. And now you have $108 trillion of household wealth in the United States. We've got something that works. And that framework wasn't that we were working harder, it wasn't that we were smarter, but we had a framework that unleashed human potential.